Hello, my name is Daniel Gibson, and I am completing a stock analysis of Comcast, Netflix, and Verizon. For each business, I will do a business model, a pestle analysis, a SWOT analysis, and Porter's 5 Forces model. Comcast also goes by the name Xfinity after it's been rebranded, so I use those interchangeably. Comcast sells home security, internet access, landline services, and Xfinity Mobile as well. Xfinity has an extensive cable network, which is connected to a large number of houses. This is used to operate the cameras for the home security. This is used for landlines, cable TV, and internet as well. Many of these cable lines are exclusive for Xfinity only, meaning a lot of houses must use Xfinity and have no other option. Comcast has a lot of strengths. They have a strong name brand recognition, a giant customer base, and a high barrier for entry into the industry, since it's very expensive to launch a cable network. Comcast also has a deal with Verizon right now, so that they are able to access Verizon's cellular network for their mobile side. Unfortunately, Xfinity also has a lot of weaknesses. They're losing ground to streaming services, and a lot of people are unsubscribing to their cable services. There's also a lot of fierce critics of Comcast for their high prices, and sometimes they may even have poor customer service. As the world becomes more reliant on online technologies, Comcast has gained ground. Many jobs have been able to be done online, which means that a lot of people are not only able to use Xfinity services for their internet, but they're also able to write it off on their taxes. Xfinity products such as Xfinity Mobile have also gained ground because more and more people are realizing that it's a cheaper alternative to Verizon. Unfortunately, there are also a lot of threats to the future of Comcast. For example, Verizon and AT&T have been known to take a lot of internet customers as well as cellular data customers. Verizon and AT&T offer unlimited cellular data plans, which compete heavily with Xfinity Mobile's plan. Companies such as Dish, HBO, and Netflix are also taking away cable TV subscribers. Since their customers pay on a monthly basis, Comcast recorded over $121 billion in sales last year. That being said, I would not recommend investing in Comcast. This is because there is fierce competition in the telecommunications industry, and I fear that Comcast is losing the battle. They're also losing the battle in cable TV. HBO Max, Netflix, they're all undercutting Comcast with their streaming services, which have less taxes and less fees. I also know firsthand that a lot of Comcast customers are getting tired of the price hikes. This is because I am a former employee of Comcast. I was a sales consultant, and so I saw how many customers were leaving on a daily basis. I think this trend will continue and will end up hurting Comcast massively. Do not invest in Comcast. It is a bad stock. The second stock I've chosen to analyze is Verizon Communications. Verizon has a number of key partners, such as Apple and Samsung, which give them discounts on new phones that they can sell to their customers. Verizon also has an unlikely key partner as well. They are partnered with Xfinity for Xfinity Mobile, which utilizes Verizon's network for connection. This allows Xfinity Mobile to have access to one of the greatest networks in the United States. In exchange, Verizon gets hefty payments from Xfinity Mobile every month. This extra revenue is very helpful for Verizon since they have very costly monthly operations. Some of the key activities that Verizon engages in is expanding their network, maintaining their network, and doing their best to prevent hacking. Verizon also has 2 major key resources. They have their name, and they have the best cellular network in the United States of America. They use this cellular network to sell internet and phone plans. However, this can be very costly. For example, in 2023, Verizon had over $111 billion in operational expenses. Another issue is that Verizon does not have a lot of opportunities going forward. They already have a very excellent cellular connection in the United States of America. They have to do their best going forward to bring change and do their best to draw in customers from AT&T, Xfinity Mobile, and many other cellular companies. These companies are their greatest competition. They're taking their customers, and they are offering oftentimes lower prices than Verizon. Verizon also has a number of other weaknesses. For example, their network went down due to solar flares this year, and that was a major expense. They also had been hacked, and that led to their private information being leaked online. I would definitely recommend investing in Verizon stock. I personally have almost $1,000 invested in. One downside to Verizon is that there is moderate industry rivalry, and there is a decent amount of competition. However, there is a low threat of new entrants, and I imagine Verizon will stay one of the best networks in the United States of America for a long time. For these reasons, I would recommend investing in Verizon. Netflix is a streaming service that, for a monthly subscription, allows customers to access their streaming library full of different movies and TV shows. Netflix has a huge number of key partners, but most notably companies like Sony, LG, Roku, because they make it easy to access Netflix on their televisions. These TV brands often have a button you can push that'll open up Netflix right away. Netflix also has some very important key activities. They have to add and remove different TV shows and movies. One of the weaknesses Netflix has is how fierce their competition is in the streaming industry. There's Disney Plus, HBO Max, Prime Video, and for these reasons, it is very hard for Netflix to acquire new customers. One very positive opportunity Netflix has going forward to differentiate its product from its competitors is by pursuing sports. The reason I believe Netflix is going to pursue sports is because of how they've pursued the Mike Tyson versus Jake Paul fight. And that cost them approximately $60 million to pay Jake Paul and Mike Tyson to fight, yet it was one of the most successful streaming events of all time. I believe that Netflix has a very good opportunity in this market to take over the sports side of streaming services and compete with Amazon Prime that streams Thursday Night Football. Netflix has experienced some political issues. One of these issues is that they're banned in countries like China, which means there's a whole customer base Netflix is not able to access. There is a low threat of new entrants into the industry. There is a low bargaining power of buyers, and there's a low bargaining power of suppliers, which is good for Netflix. However, they have a high threat of substitute products, and they also have a high threat of industry rivalry. According to the Motley Fool, Netflix currently has a market capitalization of $400 billion. I would highly recommend purchasing this stock. One of the main reasons I would purchase this stock is because in my SWOT analysis, I found that they had a large amount of opportunities going forward in the sporting industry. I think they have a very good opportunity to pursue sports streaming and take over the whole streaming industry. In this project, I learned a lot of valuable things. The most valuable thing I learned, however, was that it was very important to look at many different types of analyses in order to come to a conclusion on whether a stock is good or bad to buy. One example I have of this is how in my Porter's 5 Forces analysis of Comcast, it looked like the brand was excellent. There was a low threat of new entrants into the industry, and suppliers and buyers had a low bargaining power. However, my other analyses were not so positive. For example, in my SWOT analysis, it showed that there were low opportunities for development in the future, and there were some major threats to Comcast cable TV, such as Netflix and Prime Video. Thank you for watching my investment exercise video, and I hope you take my advice on these 3 stocks.